Hello, everyone. Happy Wednesday already. Wednesday, week half over. How is everyone doing? Or nearly half over. Hey, Sterling, how you doing this morning? Thank you for putting in the news. Is it still your day off on Wednesday? Good morning, John. Good morning, Jacob. Good morning, Heinrich. Good morning, Patrick. Good morning, Anissa. Tesla down pre-market. So is Nvidia. Good morning, Mark. Don't pay attention to anything Wedbush says. I'm sorry, it's a joke of a firm from my perspective. Uh, JMP Securities raises target price to 300 for coin. Nvidia, what bank is that? Bank of America. BOFA Securities raises target price to 1,100 from 925. So keep raising the target price on some of the inflated assets. Christoph will remember, just because it's inflated doesn't mean it has to stop. Greetings. Good morning. All right. Good morning is options 22. What was that? NVIDIA. Nobody knows where we are in the journey of artificial intelligence, but NVIDIA seems to be on top of their game. So we're probably getting to a top. Good morning, Royal Palms. Good morning, Eric. It is your day off. All right. I have a feeling we'll see a similar price action to yesterday. Well, yesterday, shrugging off the CPI, crushing volatility. And I was watching that 1450 level. It plummeted through there, and the rally took hold. Especially Nvidia, massive day yesterday, up over 7% in Nvidia. A little gap down this morning. Today, just a very quiet day. Very quiet day. We already had the mortgage information come out. We have the EIA number, so you got to keep an eye on crude, which is bouncing. The last 2 days held some key support, and now trying to continue a little bounce back move in there. And then tomorrow, remember, we have PPI and jobless claims. But today is very, very quiet. So far, Nvidia down 1%. All the chips are down this morning. Apple, if you notice, even with this little bounce in Apple, it's getting some pretty significant selling pressure. If Apple takes out its recent swing low, watch out. Tesla down. Dollar General, and Dollar Tree. I think it was Dollar Tree's closing 1,000 stores, and Dollar Tree was a miss in earnings. Oil and gas stocks up. Groups, let's just do a quick refresh of this. Energy and utilities still leading. Consumer cyclical, technology pulling back. So after some key rallies yesterday, a little pause so far. Might resume after the cash open starts. Still, we have 3 rate cuts priced in. 3 rate cuts priced in through December. We're going to have to see. Remember, the Fed meeting next Wednesday. So exactly 7 days from now, we have the FOMC, which is going to be a pause. It's pretty much guaranteed there's a pause for that, but it's going to be interesting because they also released the dot plots, which are not released every meeting. March is a release of the dot plots. We're going to have to see how that changes next week. It's still in greed mode. As I mentioned, Dollar Tree was a miss, a huge gap down in Dollar Tree. Also with the announcement that they're closing 1,000 stores, which that's pretty substantial. So, and the low end consumer is really, really struggling. Tomorrow we have Dollar General. So I'm going to be interested to see. Now, Dollar General already somewhat selling off with Dollar Tree, but it's going to be interesting to see how Dollar General does tomorrow. Really nothing after the close. You got Lennar. Nothing huge. Nothing that's going to move the market. And then we got Dollar General and Adobe tomorrow afternoon. All right. So where are we? Hey, AS. Thank you for tuning in. Good morning, Charles. What's my take on the Dollar Tree news? It was pretty bearish, and it's not. I mean, you can see here, we completed the most recent little 87.5 off this last rally, and then we had a multi-top, and then it's just a huge gap down. But just if we flip this around, Let's just take a look at Dollar Tree real quick because it's interesting. Even if you don't trade this as you go, I don't care about Dollar Tree. It can also be, when the lower end consumer starts tipping, then the mid range consumer starts tipping, and you only have the high end consumer doing well. It's a sign of stuff. Now, 127 is very key. 120 is this area, but look at the gap below. If it can't regain this 130 area, I'd be watching for a major rollover place, and then the close below about 121. Kiss it goodbye in the short term. Now remember, it was a miss in the last one, the prior one to this, and it still continued to rally. But this was very overdone, and now it's a lot of bearish news coming out. So back to the market, which again bounced up. This was beautiful yesterday, a thing of absolute beauty. Let me just go through something here. In conjunction. So these are one of the things. If you're trying to learn something, this is just a textbook. So it came up here. We had that 62.5, that 52.19, 52.20 area identified yesterday, bounced off of it, coming back up, closing above it. All right, so that shifts the probabilities. Closing above it here, hitting the 75 with the harmonics. Now, the probabilities are still shifted, but you have then the pullback to major resistance. Remember, look at the longer term candle bodies. You can see it right here. Don't get lost in those 5 and 15 minute charts. Coming back here with so we had resistance, a break, and then a close at resistance, and finally a breakout, coming back to retest that level with the rising 1 hour rotation zone, and then moving up and stalling out at the 87.5 harmonic, which was identified. That's the kind of stuff you're looking for. So when you get these longer term pullbacks, that's when you can go to the shorter term charts and see, all right, maybe you got a buy signal there on a 15 minute or a 5 minute basis. That's the kind of stuff. But focus on these longer term, the 1 hour and the 4 hour charts. Now it's stalling out at the 87.5. So guess what the key level this morning is? About 52.45. It's got to start getting some closes above there. You can see here it's stalling out at that level. So that's, again, going into the open, that's the level. The support level is roughly about 52.35 to 52.32. Anywhere in that, if it pulls back in the open, I'll be watching for it to bounce. If it gets beyond there, then we get back to that 52.20 area. So that will be key. We might turn into a choppier day unless we get some really strong tick pushes, just because you got the PPI and the unemployment numbers coming out tomorrow, and we've already hit some key levels. Now, you get through that 52.45, 52.57 is the next major level. The first area I'd use on any rally up, just because we could go into choppier mode, would be around raising about 52.53 area as at least a stop raise, if not looking for reversal patterns, because I'll be looking for any topping patterns between about 52.53 to 52.57 on the shorter term. In terms of the bigger picture, yes, this is now requalified as a potential double top. By the way, if it does break out above 52.57, it's 52.78 roughly the next level. This is qualifying as a double top. If this were to roll over and trigger, the rotation zone would be out of the way on the daily. And on the weekly, you see here the weekly, we could easily return into the rotation zone. I mean, this has been on a tear. Cycle still can't break lower and very overbought. And we're going into the Fed meeting. This market is very, very complacent. Just keep that in mind. Now, the NASDAQ could not. Remember, watch for closes. Why do I cite 1 and 4 hour closes? Because those are the most key ones. Don't focus on the little, it closed on a 1 minute chart above the 62.5. That is noise. Okay? Even on the longer term, in overnight sessions, I start, which would be Asian European, I watch for that 4 hour close. You can see here, stalling out, pulling back. So 18,484 roughly. That's the number to remember on Going into our open with a 1 hour close is then followed through by a 4 hour close. That's the breakout level. You get a close above that. The magnet prices are 18,553 and 18,622. Testing a very key support area right now. You see here the reaction yesterday morning, the pullback, same thing in the NASDAQ. It was easier on the S&P from my perspective because we had already closed above the 62.5, so you got the probability shifted, but you had prior resistance. Close above it into the pullback area, or the rollover area between the 50 and the 62.5, pulling back to that breakout area, rising rotation zone, and then stalling out at that 62.5. So trading around very key support around this 18,415 going into the open. If that breaks, the next major support level is not really back until 18,345. There's some minor support about 18,380, but the major support 18,345. Yep, looking, there you go. Sterling typing in other stuff, helping people out with the VVIX. Triggered 1 hour double top yesterday and has hit the first target, looking for more declines in volatility. Sterling, you're just, man, you're really rocking this stuff. You're really doing a good job with putting stuff together. That's the key thing, looking at multiple things, putting stuff together. Now, the NASDAQ, by the way, you can see here with the rotation zones catching up on the weekly. The daily, still, this has not moved up enough to invalidate the potential double. It could be invalidated. You know, we start getting back up to the 18,580. The NASDAQ has turned into a major sideways channel. The Dow, I'm still watching for some higher prices in here. We have the daily close above the 62.5 of the retracement. So 39,562 and 39,670 are the next magnet prices higher. Key support now coming in at 39,350. Russell, I'm really keeping an eye on yesterday's high and low. Oh, yeah, especially yesterday's low for any breakdown zone. 2072, 2073 is key. If you start losing that, it's lost some very significant support. Major resistance is 2110. So those are the key levels. As long as it's in there, it's in no man's land from my perspective. The VIX, major reversal yesterday, back down to 1375. We start breaking 1375. I'll watch, especially for choppy to bullish. And next area is at 1340 to 1350. The DAX. The DAX, we don't really have anything yet. Next key target area is 18,100. The major support area is coming back about 17,850. Other than that, there's no key reversal pattern yet. The notes pulling back, coming into a very key support, this 110.26. Not a lot of great patterns in this still. And we still technically have not invalidated the double top from before. So I'm really going to be paying attention to this, especially next week going into the Fed meeting. The micro yield now going to be watching today where it closes in relation to 4.17. This is getting a pretty good bounce back here. And could still run a little more higher, but it needs to keep above this 4.17 on a closing basis in the short term. Still, the pattern did not get invalidated and never hit the first stop reduction level. 10-2s, not much to talk about. It's getting really triple bottomish, but we'll keep an eye on that still. Dollar index up, could not close above the key resistance area, just pausing. So I'm paying attention to yesterday's high and low. Yesterday's high and low are key for me with the dollar index. Crude, we got the EIA numbers coming out. So paying very close attention at 9:30 Central Time. That's what I'm watching. And then on a closing basis, 79.33 for the continued next push higher into resistance again. So still trying to form a higher base, came down, tested that 50 EMA, never triggered the double bottom. If it rallies back up, that's off the table anyways. It's confirmed, but it will be off the table because it's never triggered. And you finally got back to cycle bottoms with turning up. So going to be paying very close attention to crude, because if it chips away and can get through this 80 area again, we could really see another push higher. Not much to talk about with natty gas. Just today we might get the close below 62.5. And remember, we got the initial bottoming pattern, the run up. This is another good teaching. Hitting that weekly rotation zone, now possibly forming a stronger bottoming pattern against key resistance. That's why don't be afraid to take, all or most of your profits on the doubles, and then watch for a reload, because this is the bigger secondary reaction. And then if it then triggers that, you have a more substantial run, and it may never trigger. Gold still holding key support, 21.50 area. So that's all I'm really watching there. 10 US dollar Japanese yen. Keeping an eye on here. I'm keeping an eye on yesterday's high specifically, or if we get a close back below 147. Euro, if it's going to see if this rotates back up into little minor double top territory, which would be above 109.61. That's all I'm really looking for there. Remember, it's in the major potential topping zone. If it closes back above 109.72 area, it shifts back to continued higher prices. The spiders do have a potential double top. Long way out from triggering, but that's just from a trailing perspective. That's a great level to keep watching. Already back to that 87.5. Now if the spiders break out, your little minor harmonics, 519.44 and 520.65. All right, so that's where that sits. The next, this is just insane. I mean, this is really insane price action. It's not natural. And then the next major target would be about 524.70. If it can continue, but it's just stair-stepping higher without any, these rotation zones have held so beautifully, and it's just still buy every dip. Looking at today, if it rolls over at all, it'd be the gap fill to the close of yesterday, 516.78. And then my major support area is about 515.80. The Qs, 443.69 on a closing basis. It closed at 443.66. So did not manage to close above that 62.5. So on any rally, it would be to the gap fill of 443.66, and then have to follow through with a close above 443.69. Then the targets would be 445.34 and 447, roughly. The pullback areas, 442 is a significant cluster, and then we're looking at roughly about 440.40. If we lose that, one of the last lines of sand I'll be watching is about 438.75. All right, good morning, Legion Reaver. Even Macy's isn't shining so bright. Macy's still has a confirmed but not triggered weekly double on there. So, and it's Christoph, Adobe, which does have the triggered double. So, let me just fix something here. It has a triggered double bottom. That's the one I'm talking about. This pulled back. So this, after hitting the first target from the double top, has the pulled back to 75 and then is closed above there. So that is key. I definitely look at the conservative targets on this one. 595 area, 604, 614. You still technically have a gap fill up around there too. All the credit belongs to you, Mike. It's only taken about 3 years of your tutoring to start see the bigger picture. I have a long way to go, but I don't feel like I'm drinking from a fire hose anymore. That's great news. Again, that's why this is, and consistency and learning and taking stuff in slowly and then incorporating it into your own trading plan and methodology is key. It's not learning. Anybody who tells you you can learn this stuff and just take a quick little course, or you learn these things and learn to turn $10,000 into $100,000 in 3 months. It's a load of crap. You're essentially gambling then, and some people can get away with it, but they won't sustain it. Remember, if you want to do this long term, the best way to do it is be in the game long term. That is key. I mean, Bob said for years, this is not a get-rich-quick scheme. It can be a get-rich-quicker methodology once you will learn to do something correctly. By the way, Christoph, just keep an eye on this little flag pattern that's forming within the bigger breakdown pattern. So just keep an eye. This is one that I'd probably be a little more aggressive raising a stop on. So again, trading, if you want to hear about get rich quick in trading, this is not the channel for you. Tesla, still watching for the breakdown area. I mean, it's so far just a sideways correction with cycles moving back up, but there's nothing really bullish. Even with a gap fill back to 189, still watching for the next downward move to that 163 area. Nvidia, paying very close attention because it couldn't close even with this massive bounce yesterday. Could not close above 924.37, so still going to be watching that. Little pre-market gap down today, so the first targets would be 919 area, 919.13, then 924.37 on a closing basis. And 940.92 puts it in potential double top. Again, may never trigger. I'm still focused on this magnet price of 1,000, which could get taken out before the Fed meeting next week. Could get taken out. Also, we got daily cycles still going down, but this is holding up. So keep an eye on Nvidia, even if you're not trading it, because it's really driving the market right now. So look at their store closures and their earnings miss. Macy's second quarter earnings will be interesting. Yeah, Macy's will be interesting. The rotation zone and the doubles changed my trajectory. You are welcome, Charles. Well, why I do the day in and day out is because you can see consistency. I hope you can see it's not just coming in and going, I think this is going to happen. It's a structured methodology each and every day. And sometimes I show some new things, but it's really, I'm trying to teach you a structured methodology because that's what's necessary to be around a long time in this market, is a structured, not one day you're applying this, the next day you're applying this, the next day you're doing this. Then you're chasing things. Nothing works 100%, but there's some things, especially things I teach, that work very, very well. And if you're chasing 100%, you're going to be chasing forever. What it is a key methodology that you incorporate into your time frames and your structure and your markets, and then repeat it over and over again. And you can learn, and you'll make tweaks and tunes. Again, as you grow as a trader or investor, you make tweaks and tunes to your structure, your methodologies. But you don't just flip to, today I'm using the MACD, tomorrow I'm using stochastics. Wait, the C, this level, those fibs work today. I'm going to focus on fibs. You got to be consistent. And you got to find things that also match your personality. And it's not just chasing something. And you have to analyze both sides of the market. Too many people get blinders, and people are like, well, your double tops aren't triggering. Well, that's because it's a trend up. But that's great for longer term stop levels. Like if Nvidia goes into a potential double top and then closes back below 841.66, But until that happens, has it triggered a major reversal pattern yet? No. So until that happens, you got to go with the trend, even if it goes insane levels. And there will be a time that it does reverse. So let's just peek at the S&P. By the way, I wanted to show you Apple. Just keep an eye on this, even if you don't trade Apple. Because look at this. It hasn't been able to fill gap left back from Monday the 4th. You see, look at the selling pressure. It's still coming in here. Now, if it can fill that gap and then pop a little higher, it would be at least better for, because Apple's still one of the mega caps, would be better for the market in the short term. But if this rolls back over and really starts breaking back below 172, it's not good. All right. From my perspective, again, everything's from the methodology that I look at in my perspective. So going into, again, the open, still 52.45. And to the minor support level, 52.35. That's, so support going to the open, still 52.35 to about 52.32. Nothing's changed. Let's see where the tick's opening today. Very flat tick opening. Very flat tick opening. Now here's something else I'll point out. Keep an eye on this. I'm drawing this little trend line. This is from yesterday's. Remember these stair stepping higher with the push downs. So if you start seeing this level break, especially with key closes, back below about 500 on the negative tick side, pay attention to that. All right? Pay attention to that. That the market could turn into choppier to some bearish mode. Other than that, I'm in choppy to bullish unless it can really start breaking out. And that's really start breaking out about 52.45 and then follow through at least in the short term with 52.47. Closing out on the shorter term basis. All right. You're welcome, Anissa. Let's see. I'll get, this is not gambling. Been here almost 2 years. Mike's consistently discipline and daily analysis is essential to putting it all together. You're welcome. I appreciate everybody taking their time out. You know, it's your valuable time. I'm going to send you a funny video today from a YouTube channel called Kamikaze Cash. It's hilarious and sad at the same time. It showcases what happens to retail. All right, I'll take a look at it. That's why I have such a small audience, because we're not looking to get rich quick, but to learn. When do we get some advanced stuff? Look, you got to master the basics, and there's stuff I talk about on here, but if you've mastered the basics, and look how Sterling's been here 3 years, and he's finally putting it all together. You don't have to be, you don't have to make trading or investing more complicated than it is. You know, especially on the weekly basis. Like for stocks, I really focus on weekly time frames. Love the morning breakdown. Mike is part of my trading day now. Well, thank you. I have asked wife me Galton board for my desk to remind me that everything in the market operates on the natural distribution. Very nice. Once you learn to see it and put stuff together, there is a natural rhythm. Now, sometimes it can get overruled, by short-term events. But once you start seeing it, there is a very strong natural rhythm to the markets. By the way, I'll be on the Tradier with, what do we call it, though? Live stream this afternoon, 3 p.m. Central with Bob and Jim. Bob and Jim. So if you want to jump on that, go for it. It's been tweeted out by both Bob and Jim, so if you don't have the information, go look for that. Your brain can't help it. Don't put too much in. It gets too complex. You're welcome, Mark. I'm glad you're using time, price and time method. All right, I shall talk to everyone later. It's very quiet. This is a very quiet opening. A very quiet opening so far. So don't do anything silly. Remember, every day does not have to be a trend day. And we just had a big one yesterday. So I will be back for tomorrow's PPI and unemployment numbers. I will talk to everyone later. Bye for now.